Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and take a look at hot spots in the markets for today, Monday, June 13th. My name is Todd Rich. I am with Nadex. With me, the CEO of Keep Trading Simple, Brian Caprice. And yeah, we've got a busy morning today and we've got a busy week ahead. What are we seeing in the markets? Well, if you haven't seen any of the news yet, equities are getting routed. We did get a big sell off on Friday after the inflation number, the CPI number here in the States, seeing inflation 40-year highs. We've got a challenge. And we had a sell off on Friday, and there it is extending into today, and it's not pretty. We're also seeing a washout in cryptocurrencies. Bitcoin down over 10%. Ethereum, I think it's getting close to 15%. So it really is it's a risk off day as people position for a big week. We've got PPI tomorrow. So we had consumer price index. Now we're going to get the producer price index. Of course, if it's costing producers more to make the goods, it's going to impact the price of the goods that they sell. So we are going to get a peek at that. But Wednesday is Fed Day. We will get from the Fed the expectation raising half a point, 50 basis points. We'll see that on Wednesday. The question is there a surprise? Is 0.75 potentially a surprise to do something with all of this? Thursday, Bank of England making their announcement. So we are seeing a setup. It's a follow through from Friday, and it's a setup for the rest of the week. Before we get into the charts and take a look at, all these equity charts, we're gonna have to start looking at levels, and we'll probably take a peek too over at what's going on over in the yen, as that's actually hit a level earlier today, which we'd spoken about. Before we do that, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. I did mention the yen. And if you can actually see it, Brian will go through this because I'm certain the dollar yen, but we'll probably even be taking a look at the pound yen as well. It actually did touch the 135. We had put that out there as a level that they said, hey, it gets the 135. Expect the Bank of Japan to do something. Well, it touched it and backed off pretty quickly. We'll see what happens. Just lots of volatility, equities getting hammered, and yeah, we're gonna have to talk about cryptocurrencies too because it's pretty ugly. Here, Brian, I'm going to flip it over to you for any other things in the headlines as we get ready
Sure.
for
Yeah.
Fed Week and Bank of England Week, and here we go.
Yeah. It's only ugly for long. If you're short, you're happy, So it's yeah,
Yeah.
yeah. It's one of those things. It's funny. They always say that you can go up the stairwell or you can fall down really, really fast. And again, more money is to be made in down markets. It's absolutely true. It goes much, much faster. So right now, the biggest players out there. We're obviously seeing some data out of the pound. There was actually some kind of not hidden, but when they're looking at their monthly estimates, this came out about 6 hours ago, talking about their GDP falling. Um, it's funny. Pound may be heading for a recession. They're actually already there. Remember, the pound did 4 raises in a row. They did the 0.25, 0.25, 0.25, 0.25, and their inflation didn't slow down at all, and they were over 9%. They're leading the way right now. If you look at all the industrialized nations, they are basically of the big ones. There's a couple smaller nations that are higher, but they were over 9%. The United States was the next one behind at 8.6. Their 4 raises in were 2. So we're kind of following their same path, and we're watching their GDP fall, 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 fall. Because of that, the pound is obviously down today. Click, there we go. You can see the 2 biggest movers right now is the pound dollar down 122 and the pound yen down 184. The yen is also getting some movement as well after some weakness. Some of the headlines in here are pretty interesting. We had one of the ECB chiefs talk about how there's a clear need for 50 basis points. We've heard that before, but they look like they were pretty dead set. And if you look at the kind of the movement the last hour or so, even though they said that an hour ago, we're not seeing the market really do much with it. So it's kind of like the same talk that we heard from the U.S. Fed presidents, some of the lesser ones, and they're like, yeah, we need 50, but not really necessarily one of the movers. It's not really doing much in the market. Um, some of the other things out there, 135 was breached. That was something that came up, but immediately we talked about this. That 135 would be a big psychological number. When it hit it, it would turn in reverse from it. I'll just might as well bring it to the chart to show you that one. We talked about this, and you can see magically at 12 o'clock, right, midnight, it hit it. What did it do? It had a one candle base and then turned and rolled all the way back down again. We talked about, basically short positions from that level. And again, we were looking at it in the overnight. Again, we knew 135 was going to be psychological, and it's dropped at almost 100 points all the way back down. Actually, it did. It actually went down to 133.86. So again, kind of a predictable look here. The pound yen, obviously, it pulled way far back, and we talked about it kind of falling last week. We talked about an area at 165.47. It hit it. It bounced off of it when the week ended right here. And again, this is why, we look at these levels, and when we use them correctly, here's the 10th, here's the 12th. This is where it ended for the week. Again, are you going to enter a trade with 2 hours? No. But what did it do? I'll zoom in. You guys can see here. It came up in the overnight, dropped in, based, and then pulled back right for the European Open. The European Open was right here. Again, signaling that obviously not a long, but signaling a short trade. You can see went all the way down, blew through another Harry Potter, and actually we just touched the 163.41. Big level that we had mentioned last week. So had you been following last week, a lot of movement the overnight inside of the pound. Honestly, looks very, very similar. We also had another Harry Potter here. It also used its new levels that it formed late Friday, dropped, and it is there as well. So I would say that the yen has the ability to come all the way down to the 92.94. So everything yen-based is obviously moving. VIX is up 17%. That is an absolutely huge amount. But I'll say, there's no news today. There's no planned news. So today is all about preparing for tomorrow. I'm sure there's probably going to be a headline, and I'm very, very interested. So tomorrow morning, we do have the PPI number. It is expected to be higher. Again, CPI was a lot higher. If there's I don't want to say emergency because it's not really an emergency, but if there's an unplanned comments, speech, whatever from the White House last week on Thursday night, they kind of foreshadowed that there was going to be numbers worse than expected. If they do it again today, we know we're in for a major doozy tomorrow. Is kind of what I'm looking at. And again, that's 8:30 tomorrow morning. With the VIX this high, obviously over the weekend, everyone was like, oh my God, what are they going to do? A lot of volatility, a lot of fear. But right now that the markets are open in the world, the sky hasn't fallen yet, I wouldn't be surprised if we start to see the VIX ticking back down. All the indices are deep in the red. And again, you may wonder, well, why are they down so much? The market hasn't opened. You're right. But the market is preparing for the day right now. So where we are right now, there's a lot of uncertainty when the market's closed. VIX very, very, very high. Market's way, way down. But there's no news today really to make things worse unless they start talking about what they're going to do on Wednesday. And again, they may not foreshadow at this time. But I would say, although everything's deep right now in the red, I think we stand the potential today for a little bit of a rally, and there may be some trading opportunities out of it. Just because, again, with this VIX right here, yes, everybody's so scared of the unknown. But right now, once the market opens, we know we have no news to mess it up. It's kind of like, okay, it's all priced in. And all the retail traders that say massive red numbers over here are going to be like, oh, I should short. Well, that's what the market does. It moves in the off hours to where it needs to be. Now it's all on sale. Everybody tries to sell it. And meanwhile, they're buying the positions. They're giving them out to the people. So when the market goes up and all those shorts get stepped out, they buy them back because they are buying low and selling high. Okay. Meanwhile, all the retail traders are, because it's big red, they're trying to sell low.
They're late to the game.
Back higher. Yeah, they're on the opposite end of it. So although they're all big, down for the day, I think there's a potential rally in here somewhere just to get a little bit. Now, am I saying it's going to end green today? I'm not saying that. That CPI number last week was absolutely enormous. The Fed obviously needs to do a lot more. And again, I'll let Todd explain this one, but we just had, where's it right here? The yield curve inverted again, signaling another recession one. So, Todd, I know you love this. I'll let you explain this one.
I do look at it because, it does signal recession, and we did have a little bit of a spike. The 2-year rates went above the 10-year rates. And you think about that, it's just kind of strange that it's going to cost you more to borrow money for the short term than the longer term. It's counterintuitive, but it is a trigger that we are signaling recession, and that might be what we need to get out of. We need to break the cycle here of rising prices.
Yeah.
And the only way that we can do that is.
And this is kind of the behind the scenes thing. And that's why I wanted you to kind of bring it up, just because we've had a Fed president talk about we may have to drive it into a recession, right? All the talk of a soft landing. But once they officially say, "Yup, we need to have this. We need to, we need to put this down." Here's one of the behind the scenes things that people don't look like it, but just another thing behind the scenes that banks and institutions are looking at that is also signaling recession. So, I hate to be the bringer of bad news, and this is actually not bad news if you were a trader, because like I said, you can absolutely make a ton of money on the way down. If you look at some of the biggest trades of all time, they're not longs, they're all shorts. Okay. So this is not bad, because the average person that has no idea what they're doing is going to be like, "Oh my God, my money's going down." This is a great opportunity. Nadex doesn't care if you do long or short, and you're still protected. Again, shorting in the overall market, extremely dangerous. With Nadex, it doesn't provide any more
But you've
additional
got
risk
that.
than if you were going long. Yeah, so it's
You
a
got
great
buffers
opportunity
on
for
it.
us. So it's kind of like recession's coming. Great, learn how to trade. It's the best time to do it, because a lot of people in their 401ks and things like that, instead of losing money and things are getting worse, it provides great opportunity for us. So all the indices, I don't think it matters which one. Again, they're kind of completing a lot of the trades. We'll
Yeah,
look for
actually,
some type of a decent bottom today. What?
yeah, I want to see this because I think the Nasdaq's getting clipped the hardest.
Yeah, Nasdaq is down 2.86 right now. Russell's closely behind it, and again, Russell should be the most negative at this point. The Dow is actually the strongest. So if we do get any type, and again, we had that little Harry Potter there, and the Dow just missed it in the overnight. It did kind of base and pull back again. It did gap lower and then kind of came back, and we kind of missed the entry, but it's beyond our profit target at this point. But all these from last week we talked about. The 1800 figure, again, we talked about 1800 would be extremely significant. Right now at 1756, there's probably, again, the next big target I look to the downside is that 1700 number. But I would say things to watch out for today. I mean, ES is obviously at 3800. So again, we're well below the 4000 mark. I don't think it's dropping 800 points today. That can't really happen. I guess it could, but probably not. That would be a lot. But looking at some of the other ones, I mean, we know that, NQ can move, it can move 500, 600 without a problem. It's approaching 11,000. If it drops another 500 more, we're at 11,000. The Dow, I think, is the one that we need to watch the most right now. At 30,750, it's down about 600 points already. Again, that's not outside of its daily range, but like 750 to like 1,000 is kind of where we're getting to the extreme level. If this continues to drop, we have that 30,000 number coming right there. And remember, 30,000 has a lot of zeros in it, right? That is a very large psychological number. Forever, it was like, "Oh, we'll never break 30,000." Then we broke it. It's like, "Oh my God, we broke 30,000." If we crash back through 30,000, particularly with a PPI number, that's where people are really starting to panic, because again, that's a big move. It's a big psychological level. It came from very, very high to very, very low. This could be a big deal. And 52-week range, we're talking about, it was at 36,800. So that's massive amounts of destruction here. I mean, it's this isn't even necessarily the high. The high was all the way over here. So you can see we're massively pulling back. We were talking originally about months ago about, hey, 40,000. We're running super hot. We could hit 40. Well, now we're talking about that 30,000 number. So this is kind of big.
And
We are getting a little bit of help. What?
Yeah, I think we actually are, and I think depending upon where we close today, we will officially trigger a bear market.
Yeah.
Measured by
yeah.
20% down from your recent highs. So
yes. Yeah. And that'll be all they're talking about. Bear market. We're officially in a bear market. Not officially in a recession yet, but that's coming. We are getting, and again, you're seeing kind of risk off everything today. You're seeing, again, crude is helping us out today. It's down to 119. It's 118.94 right now.
Yeah,
but it does
great.
have some buyers a little bit below. Yeah, I mean, in the overnight, for the European session, it started off today and it was down at 118. So we're basically $1 up from where its low was in the overnight. I would say right now, what's interesting about CL and oil in general, if you take the most recent high to the most recent low, that 50% just happens to be where the weekend closed and there was a little bit of a gap. So it's an area of sellers, a big push down, a gap, and the 50% retracement level. And that's floating there right around that 120.25 mark. So that's a level I'm kind of looking for. If we have a rally up, we have the potential for it to turn and roll. Natural gas is kind of fluctuating back and forth. Again, we talked about it coming down. And again, this is where we were, what a day's movement could look like. Gold and silver, we're finally starting to see the collapses. And last week I said, hey, listen, we kind of had a parabolic move. It went straight up because all this additional inflation. But this was a way to, again, traders saw this and said, oh my God, parabolic move. And I said, wait, look for a top. And we ended up getting the top. And you could have done the same thing we do with all the other trades. And actually, I'll just use this red zone here. Right here was kind of the basing level we were looking at, right? when it breaks through and gets a pullback, it didn't quite touch it, but you could have played this one on the breakthrough, and there's some sellers there. This one has deteriorated and dropped already $20-something this morning. All it is a parabolic retracement move, the same strategy that we use for any type of big move. It's collapsing. Silver kind of more or less doing the same exact thing. And magically, where its turning point was, it gapped up a little bit, hit the $22 mark, which again, psychological level, and it's already down 50 cents and continuing to collapse. And the question is, can we get to 21 before the FOMC data this week? So I would say, as far as being Monday and talking about big trades, there's a lot out there. I would probably not want to bet against the dollar this week. You can see that the dollar is just continuing to grind higher, and we haven't even got any comments yet. This is just the market being like, yep, you got to do more. Your hand has now officially been forced. You have, again, Jamie Dimon, another 3 points for him because, again, he said they're going to be forced, and they're forced. We're up at 105. A 105 is so far out of what kind of the average is historically. It's a monstrous number. And even right now, looking at some of the stocks that are making this up, I mean, Twitter gapping down. Apple, look at the gap in Apple down $6 already before we've even opened. Tesla, same thing. So it doesn't matter who you are, everybody's down. And as Todd mentioned, the cryptos, Bitcoin is down almost 11%. It's 10.75%. It's below 24,000. Yeah, it's just, I mean, a lot of people said that there was a bottom down there at 26. Guess what? It went even lower. It was a rally back up at 30,000. Just, what are we talking days ago? The 7th. So a week ago, 1 week ago, right? It was, the 6th. Right here's the 6th. We were at 31,000. So we've lost $9,000 in the price of Bitcoin in that short period of time.
I think over the weekend in the crypto markets, about $200 billion was wiped out.
Yeah,
that's a pretty big
Ethereum's not even more. Yeah, Ethereum is now broken 15% down, and Ethereum is considered the second biggie. It's Bitcoin first, followed closely by Ethereum as kind of the two with the main status. And ever since that, really ever since last week, and we talked about the dollar raising and what you're going to get for the dollar and how much they're going to need to raise it, and then also regulation. This is back down to 1,200, and crazily enough, the 52-week high in Ethereum was 4,868, and now we're talking about 1,200, and it's 1/4 of what it was.
Yep.
So it's absolutely amazing.
It's risk off, and then the one place where people are putting their money is the one place where it's about as safe as you're going to get when it comes to a return is the dollar. I mean, if interest rates are going up,
look at bonds. Yeah, bonds are even gapping lower back down earlier. I mean, again, it is literally the dollar right now. Again, I know we're running a little bit late today, but I just want to add this because I had someone in my Discord channel ask about it. She was totally confused and was like, I don't understand why. How is this dollar strength? I don't get it. This is bad. The United States is bad. And just understand, Kurt, I mentioned earlier this year that this was going to be the year of currencies because everybody was raising interest rates. And some of you may be confused because if you're not currency traders, you don't understand why this is all happening this way. As a country raises its interest rate, it becomes more attractive. The currency market itself, when we talk about Forex, you'll notice that there are two currency pairs, like the euro dollar, right? Basically what it is when you're getting in this position, you're borrowing one currency to buy the other is the way that it works out, is really kind of what you're doing there. That's why there's two currencies in there. When you're borrowing things, think about your mortgage. We borrow money to buy a house, but we have to pay an interest rate to use the money. Vice versa, when we have a savings account, we put money into an account. The bank uses that money. They float it out. And what that float does for them is they take it out and use it. It doesn't hurt our account, but they pay us. We used to get money in a savings account. That's why when currencies raise their interest.
We will if we raise interest rates enough.
We will. Yes, we are going to do it again.
Interest.
Yeah, you'll get interest back again. So by just holding money there. So what happens is as a country's interest rate goes higher, it becomes more attractive because if you just have like a gold bar sitting on your desk, it doesn't earn you any money. It just sits there, right? But if you have dollar in a savings account, it can earn a little bit right now, but this is where the carry trade is big. The yen basically, they'll never have an interest rate. You can borrow yen at a 0.1% rate that you're paying 0.1% on the money you borrow.
Essentially zero.
Then basically zero. If you put it with say the dollar, it used to be the pound, but right now it could be the dollar. If the dollar is paying a 2% interest rate or a 2.5% interest rate, or even 3%, because that's where it looks like we're going at this point. If you take your money and you're paying 0.1, but you're getting paid 3% on this side, you're making 2.9% on your money by doing absolutely nothing, just holding the position. So that's why currencies is so big. It's bigger than bonds. It's on a global spectrum, and it's what banks and countries and hedge funds, they're all going to start doing this. So it's way beyond you and I. It dwarfs the U.S. stock market in sheer volume every single day. It's like 8 levels above. I mean, we're not even like a speck of sand in that pool, but we're able to actually trade it. That's why currencies are so big right now. It's why every one of these news releases are extremely important. And again, the nice thing about it is here is because we are so little, we can get in and out. The manipulation out there is not designed for us. It's designed for banks and things like that. So it's so huge. And again, there's so much opportunity. But tomorrow morning, 8:30 a.m. PPI. This is as big as a data point. Actually, some say even bigger than what the CPI was on Friday. It's expected to get bigger. And again, if this is a monstrous number, if the month over month comes in at 1% over here, or the core comes in even higher, again, this could be, and again, I don't want to say the
Wednesday an
0.75 is
interesting
there.
day.
Yeah, Wednesday is going to be unreal, but I think there could be massive amounts of red this week. And even if it comes in lower, the PPI, I don't think it matters because we got a lot more. I mean, this weekend there was a lot of rumblings about the Putin price push or whatever they're calling it now, talking about basically his way to win the war is Russia's gaining traction again. They're not going to be able to get the grain out. That the world's going to have more food shortages, and there's all kinds of non-rosy things, and inflation is continuing to get out of control. So we may have recession, food shortages, higher gas prices. This is great stuff. So
Yeah.
look for
Wonderful.
pullbacks. The way to trade this early morning is going to be drop to your 15 minutes. Look for a pullback. See if we can get a little bit of trap. Remember, the Globex high and low traps will be in effect today. Wouldn't be surprised at the open if there's a little trap sitting right here. It peeks its head down, and then the next candle literally does one of these things where it's a little bit of a, trying to get all the short traders out in the market. So watch for traps. Use your products correctly. Again, make sure you have limited risk in anything you trade today. So that's it. Sorry we went late today, but I just wanted to make sure we got that extra because this is a very
I think that was a
currencies.
Yeah, it's really important. All right, so with that, any questions for Nadex, please email us, customerservice@nadex.com. Brian and I are also available. We do love getting your emails. You can email me at todd.rich@nadex.com, or you can catch Brian at support@keeptradingsimple.com. And the quick summary, as we kind of went through, markets are getting hammered, crypto risk off. The dollar seeing some significant strength, and it's all in preparation. It's coming out of the CPI number that we had late last week. We've got PPI tomorrow morning, and then the Fed, and they are. We'll see what they have to say on Wednesday. The expectation is we'll get the half a basis point or the 50 basis point half a point raise on our interest rates on Wednesday. We'll get a glimpse of what they're looking to do going forward, but are they going to be forced, or is there a surprise 0.75 in there just to start? They got to cool this thing down at some point to rein in the inflation. Brian and I will be back tomorrow morning, so hopefully we will catch you again. Love having you all here. And
I'm gonna wear red for tomorrow.
Yeah, and
I'm gonna wear red for that PPI number tomorrow.
There we go. All right, we will until we catch you tomorrow. Good luck in the markets, everyone. Thank you again for joining.